And then Cactus Cake was asking, where's David? I think this week's candle, the last week's candle that's printed, is really nice. It's a really bullish candle. There's a lot of order liquidity in that candle now. You've got flipped levels, you've got volume levels, you've got fib levels, you've got a brand new weekly level. You've got a lot of levels that the price can go all the way back down to test to find support for continuation. So that's why this is a really bullish candle. And David, I was comparing this weekly candle to previous weekly candles. And so in all of this kind of bullish price action, this is a bullish engulfing. You got one here, you got one here, you got one here, you got one here, you got one here. You got a lot of bullish weekly engulfers. Actually, if you look at the actual move, where the move began, look where it began. A bullish engulfing weekly candle. You see that? See that candle? You see how strong that candle is? Okay. There's slight difference between this price action and where we are now, but it began with a bullish engulfing. Yeah. This is a bullish engulfing too. You see that? Except this is very different because it was a continuation candle from a green candle. Didn't close higher than there. So it's not exactly the same. This is an engulfing because it starts with a red and then it engulfs the previous candle to close high. So actually that's not. This is the one. And that's not an engulfing either because that's just a continuation candle. But this is an engulfing. Is actually not an engulfing. Again, it's the same problem. You have to start with a red. So I stand corrected on that one. But this is an engulfing, and so is this. So actually, if you look at all the engulfings, the actual engulfings, the ones that had a red followed by an actually green engulfing in this whole bullish price action, all of the engulfings candles led to higher prices. Every single one. Yeah, look. One here, one here, one here, one here, and the one we're in now. So it starts with a red, it ends with a green engulfing candle. Every single engulfing candle in this whole bullish move has led to higher prices. Okay, that's 100% record. So I don't see any reason why we don't have higher prices. And already, as you can see, the price is closed and we're going higher. Yeah, we're moving up. So you can't fade on these candles. Now, again, the reason why I think the price action here is different to where we are now is because in this price action, you had this inverse hammer with a long wick, and that's effectively a liquidity grab. And so naturally, as the price goes up, there's no more resistance levels. They've all been cleared of liquidity. So it makes it easier for the price to go up. That's why you get that kind of sudden explosive move. Here, you see here, it struggles a little bit. That's why you end up with a pullback. Yeah, you see here. This is also a bullish engulfing. Look at this. So this is a bullish engulfing. Yeah. Followed by another bullish engulfing. Followed by another bullish engulfing. The reason why you have like 3 bullish engulfing candles is because it was a lot more difficult for the price to get through all of this trapped liquidity, because you didn't have that idea of that sell-off, that sudden sell-off with that sharp wick down. That makes it easier for the price to go up. And so here you have the same situation, because you have this inverse red candle, inverse hammer, or shadow stone doji, whatever you like to call it. It makes it a lot easier for the price to go up because these wicks fill quite quickly. Yeah, and obviously you have the rest of this gap in this big candle, which allows the price to go up quickly. We don't have that situation right now. Okay, the problem with where we are now, even though we've got one bullish golfing weekly candle, is that we don't have that same concept of this sudden sell-off with this large wick or some kind of massive volume gap. So I'm not expecting the price to suddenly shoot up, even though I'm seeing a really bullish candle. And it may be that we end up in a situation like this where we actually need a week's pullback, another bullish engulfing, another 2 weeks. So you might need something like this to get out of this area here. And obviously what I said was, you know, we may end up with something like this potentially, just, you know, and that would be where we are now with this bullish engulfing, followed by some kind of 2 weeks of red potentially. Like that's the worst case scenario I'm contemplating at the moment. Tap the weekly level and then still continue going up. So I am contemplating this idea, and that's just a fractal based on this here, this where the price action is here. So if you look at this price action here, you have this bullish engulfing, then you had a red doji followed by a drop. It came all the way down. This one then actually didn't touch the weekly level, and then you had an explosive move, and that would time really nicely with the beginning of June. Yeah, so potentially I'm looking at I'm looking at 2 red weeks potentially, or doji weeks followed by another big move. That's what I'm contemplating right now, and we have to see how that plays out. All right, let me just quickly have a look at these other candles. Nothing really to report. This 3-day candle obviously was a really powerful, explosive, bullish candle. These last 3 days have been indecision, so nothing to report there. Shoulder is hurting because the table's too high. How do I sort this problem out? Right, I've got to figure this out. My gosh. My table is like up here and I'm getting a sore shoulder. Alright, sorry, that's by the by. This 4-day candle, I mean, look, it closed green. Green doji. It's basically indecision, takes the liquidity, but we're now trading up. I can't really tell much from that 4-day candle, to be honest with you. It looks bullish, but it's hard. Yeah, you can break down all of these candles, but at the moment it just looks quite bullish. I'm not really going to continue looking at them. They all look quite good. Look at this 5-day candle that closed yesterday as well. Look at that. It's like a bullish engulfing. See that? Probably every other time frame is similar. This is a 2-week candle. Okay, so even though the 1 week was a bullish engulfing, you see this 2-week candle wasn't. This 2-week candle has, you see we're into this some kind of resistance level there. So that's probably why it stopped. But you see we're still going up. We're kind of trading in the wick of that candle. So that's kind of bullish too. Everything's looking bullish. This is starting to form into some kind of reversal pattern with this doji, with this buying tail kind of forming the pivot here. Yeah. All right. So let's just kind of zoom into current price action. Let me just kind of analyze the volume now and see if there's any changes. And obviously if you have any questions, just shoot, you know, don't feel free to interject. Let me just have a look at what I was looking at this weekend. So this was on Saturday. This is what I was imagining potentially. And kind of zoom into the local price action. So I was thinking swing failure of the highs here. Look, see that? That was a swing failure, but it happened. It didn't happen on time. That's kind of when I imagined it. But obviously, look, you see that price went up, and look how far it came down. Yeah, so that was a pretty easy short swing failure, and look how far the price moved. It was pretty easy short. And then this, I was contemplating a swing failure of this level here as well. See that? And while it did, there was no swing failure. If you look at the way the price has moved, and reacted, you'll see that we lost it. But what happened was we reclaimed the level. We reclaimed that level, and we reclaimed it properly here. That was the proper reclaim. So while we were able to push up after we had this this back test here, you see how the wick came down, took the liquidity from there and closed above my level. This is my level of interest. Yeah. The price went up and it came back down, and it was front run. Yeah. So in effect, this trade was correct. It's just that it became so bearish all of a sudden that the price overshot. I had marked this key level. This was before the market structure continued to make a higher high. So while I was contemplating the price action here, that was my higher low. Obviously, that all changed when we put in a higher low here for a higher high, and then the market structure changed here. So because the market structure changed here, this suddenly became bearish. But it's funny because my key level wasn't even, look, it was front run. So it's quite interesting how, you know, the price is moving. I think it's bullish just simply because I don't know why the price wouldn't go down to take out the liquidity from that level. There obviously wasn't enough sell pressure to do that. And here you see again, it's come back down to my level here, and again it's been front run again. Yeah, so these levels are being front run, which is giving me really bullish vibes. I'm getting really bullish vibes from the way the price is moving. All right, I'm going to delete all of that now. It's all irrelevant. And so on Saturday I was talking about a higher time frame, slightly higher time frame short. I'm still going to look at that now. Let me just, for the sake of consistency, just pull the volume now on this range quickly. I'm going to have a look at the order flow and get all my levels from there, because it's good to do this on a weekly basis just to update your chart so you're prepared for the trading week. Okay, so where's my folder? Is that it? Yeah. So this is my previous volume levels, which I've marked. I'm going to redraw the pool. Okay. No changes. You see that? No changes. Value area high is slightly low. No big deal. See that? It's good to see that there's no changes because, or whatever. It's good to see that nothing changes really. That's what I'm saying. As you can see, if you zoom in a little bit, the price is now in and around the point of control. Okay. What does that tell you about the point of control? Well, at the moment, it's telling me that the point of control is not acting as support or resistance. Okay, so it's just something to bear in mind. I can't see right now the point of control controlling the price. Right now, the price is just ranging in and around the point of control. Yeah, it's ranging to the upside, it's ranging to the downside. It's just literally just going up and down in around the point of control. So I think that's a really important development in the way the price is behaving. If you look at the previous price action, yeah, where we were in and around the point of control, you can see that the price was clearly finding resistance from the point of control. The point of control was reacting to the price before the price finally rejected from that area. And here, when you're looking at the price, is very different behavior, very different. Yeah, we're not getting the same rejection, we're not getting the same reaction. And while we haven't flipped it into some kind of support level, the price is not finding resistance off the point of control anymore. I think that's bullish. I think that's quite a bullish development, that the point of control is no longer resisting the price in a meaningful way, in a way which is controlling or driving the price downwards. That you would expect bearishness, you'd expect another rejection from the point of control. Yeah, this, what we saw yesterday, was not a rejection. It was a trader's paradise. This was a trader's paradise. This was a very easy trade, a swing failure of the highs of this developing range. Traders took that short, easy invalidation. This is I described this trade in my learning to trade videos on my YouTube. Got a really short video. of how to take a swing failure. Effectively, you just price is going up above a previous pivot and coming right back down. And as the price comes back down, you mark it short. Here would you mark it short, and your stop loss will be there. And you take profit at the first line of, in this case, support. That's your first take profit. That's why when you're looking at the price action, that's why when the price comes down with this big red candle, guess what? The next candle is a take profit candle. You see, that's why, because traders who have taken the short, as soon as the price comes down into their area of first take profit, they will take profit. So you get this kind of big take profit candle, and that gives traders an opportunity to re-enter or recompound if they're still bearish in that moment, and then you get the next push down. So this is not bearish per se, it's just normal. You would expect a swing failure to develop like this, and what's actually happened is that whoever was shorting has taken most of their profit. That's what it looks like. It looks like they've taken most of their profit. They haven't risked. They've literally made a shitload of money, and they've taken a lot of their profit. WIF is Marve, welcome. WIF is racing today from a low. I'm going to have a look at it. I just want to have an in-depth evaluation of Bitcoin, just simply because this is going to set the course for the rest of the week. I just want us to be on the right track. I think the price action moving here in and around the point of control is very bullish. I don't think this is bearish at all. I think by now we should have seen a rejection. Yeah, I think by now, if this was bearish, you should have seen a rejection, and therefore I think right now we don't consider the point of control as resistance. It's just what the price is actually trying to do is just trying to flip it into support. That's what this price action is. It's the price trying to flip it into support. All right. So that's the volume levels. Let's look at this volume of this current range that's formed. How would you draw the volume here? Let's see. There's two ways to draw it. You can probably potentially you can draw it from this candle here, which comes into this kind of higher range here, or you could just take it from this candle. You can kind of break it down into two parts if you want. Let me do both, and let me have a look. I'll do it from this candle here. You see the price comes all the way down to here, so I'll do it from this candle that enters. All right, so that's that volume range. Let me just do it from this part here now, just from this candle. So this one that kind of comes into these lows here. Okay. Okay, so we're in the value area. There's 2 points of control of this local range. One of them is below us. The most local one is below us, and we're at the kind of the slightly overall one. That's telling me that initially when the price came up, people sold higher, sold there. But now as the prices come back down, because of the volume that's coming in to this area here, the point of control is actually much lower, and it's here. So the price right now looks like it's a little bit trapped in this kind of small area. It could be possible that the price goes nowhere today. It could be possible the price just goes sideways. Just looking at the current price action, you could have a look. You could do this volume pull, and you could imagine that the price could potentially just be range bound. Yeah, it's possible. Okay, so it's good to kind of have that on your charts. What else is there? So the short that I was contemplating on Saturday is still in play. Yeah, so I'll just kind of quickly go over it, and then the other thing I want to do is the levels. Let me actually do the levels first. Let me just get all my data up to date. Actually, I was doing that. I did the volume. Let's have a higher time frame levels. So we start at the Marve saying 68 today or tomorrow. My thinking since the market is open, but not much action plan for this holiday. Is there a holiday today? All right. So Obviously the monthly time frames are developing, so I'm not going to bother with that. We have a brand new weekly level here. What's interesting about this weekly level, it's at the this washed monthly level. You see that? So that monthly level is now, I can delete it, it's no longer relevant, but we have a completely brand new weekly level down here. So if you want to mark that off on your charts, it's at 61428. What else do we have? Well, this weekly level is, you see how the price is traded through it. So I could mark that if I wanted to keep it, and I will, as a washed weekly. And the reason why I'm keeping it is because the price could always come back to test that level. And this lower one, I'll just get rid of it now. Let's go to the daily time frame. So again, you see this daily level now is not relevant anymore, but we do have this one here. So that's a brand new daily level below us. And this is what I was talking about, these new liquidity levels. And we have a brand new daily level here as well. Yeah. So we have two kind of new levels here below us. And these are your liquidity levels. For the price to go down, these levels have to be flipped back into resistance. So these are support until flipped into resistance. Okay. That's how I'm imagining these levels. And then you obviously have, so this down here, you see this weekly level. You also have a very strong level here. This is a daily and a weekly, and they're both untapped. They've not been traded through. So if we do get a pullback in the next 2 weeks, that's going to be an extremely strong liquidity level. Extremely strong. You have a daily and a weekly that have both been untapped at roughly exactly the same place. So I'm just marking these out. Just keep these levels on your charts, and they're going to help you. They will help you. All right, so there's your higher time frame levels at the moment. These are all my levels in the kind of in the relevant price action. And next, what I want to do is I'm going to have a look at the order flow on XO chart. So let me just do that now. Let me start with the single prints. So hold on a second. Usually David does this for me, but he's been busy. Okay, we created single prints there on the way down, and then it came back up. Okay, so that's all been cleared. This is the 5-minute time frame. If we go to the 4 hours, can you see the single prints? No. Okay, that's better. Single prints. No. Just down here. I think I've got them already. Is that a single print or buy and sell? Let me have a look at these. Probably better to go to that chart actually. Just thinking about it. Single prints. Can't see any actually. That's been cleared. None were created on the way up. This one's been cleared now. This one's lower down. This is the nearest single prints that we have. Have I marked it? Let me just mark it here. Single prints. 62974 through to 64. Can't read that. 708. Right. And then the nearest single prints we have on the way down. There. I have some here as well, a bit lower down, but that's It's too small, really. Anything else? Can't see any. Can't see any more here. All right. So we've got that, and then obviously to the upside, I think I've marked those already. We do have single points. I think I've already marked them off. So you see here it says 67441. Let me mark it here. 67441 to 69178. And some slightly higher actually. Look at that. So let me mark those off as well. 69544 to 69979. Okay. So I'll just have a look at those single prints. Let me just also kind of have a look at the daily, if there's any daily points of control, interesting ones. We have two higher up. I think I've marked those already, but this is the closest one we have, which is at 63600. So 63600 is a daily naked. It's a naked daily point of control, like that. And if you don't know what that means, it basically means that on that day, on this day, the 15th of, the 15th of May, the point of control was established at that price, and since that day, the price has never come back down to that price. So the price has not yet traded at 63600 since that day created the point of control at that level. Okay, and so naturally what that means is in the future, if and when the price does come back down, there should be a reaction at that level, and you can use that level as your as confluence for creating a trade plan. So it's like one of your 3 or 4 whatever to create that kind of idea where you have strong support or resistance. Okay, you do that with the daily time frame. There's nothing else. There's some higher up, but I think I have those. And on the weekly time frame, we have one higher up there again. No more. So you see the last week, you see that red line, the point of control was in the highs, and we're back at that price. And you see the previous week, the point of control was there, and so the price has managed to come back to trade through that level. Let's go to the monthly. I don't think the monthly is any different because we haven't actually completed the month. All right, so that's all our levels. Let me just quickly have a look at the order flow. Oh god, extremely bullish. I don't know if you can see it, like it stands out like a sore thumb. Look at the CVD. Look at that, lower lows, like the market sells are literally being absorbed right now. You see that? So this is market, the CVD, this is delta. It reflects market buying and selling. So selling at market, buying at market, not limit orders, market orders. And you see here, there's downward market orders, like market selling, and the price is going up. Can you imagine if you're selling at market and the price keeps on going up? It's a bit annoying. That just tells you that there's a lot of absorption in the price. This is really strong bullish CVD, by the way. Just I don't want to kind of like overemphasize it, but you don't often see this. This is actually quite bullish. We have to see what happens if and when we take the highs, whether we're going to see a continuation or another swing failure. That's something to bear in mind, but this is quite good. Let me have a look at this the session data as well quickly. This is the current session that we're in. This is the London session. You can see we're above the point of control. This is the VWAP down here, so the VWAP's much lower. Okay, nothing really else to report. I can't see any other. There's this session point of control, so you could mark that off as well. This was an Asia session, 65360. 60. And naked session point of control. Again, it's the same idea. If and when the price in the future comes down to this price, there should be a reaction. we actually have one down here as well, so I can probably add that. That was the New York session, 63680. All right, that's all of the main levels that I'm interested in. So what I'm going to do now is just quickly update my single prints. I pretty much have them, so there's no real reason to do them again. I could just update them a little bit. Actually, these ones have it going much higher. Okay, got these down here. 62974. Don't know why it's higher. Slightly higher. 64780. It's lower. Just ignore them. Just leave those there. Six, 4, 7, 8, 0. So you have single prints there. And then higher up, if I had these, for some reason, this is giving me different data. It's a bit annoying. So let me just do it like that. 69544. To 69979. And then you have a wider one, 67441. So you can actually see, look, you see that the price has come into the single prints. Fine. So this is actually very interesting. So I just want to kind of commentate on that. And 69178. Yeah, which is basically where I want. So let me just get rid of these middle ones probably. Right. Let me just keep this. This is fine. We can get rid of all of these. All right, so I just want to commentate on these single prints for a second. You see how we have this big single print here, and it's got this gap. Effectively, a single print is a zero volume gap. So as the prices move down, it's created a gap. That gap will offer resistance. In this case, resistance because it's above us. But if the price finds acceptance into the single prints, then usually they fill just like that. That's the usual behavior. So when you're contemplating single prints, they happen, or they're formed when you have a large amount of market selling, such as here, where there's no orders to fill the orders, and so it creates a gap. Yeah, so someone who's trying to sell a large amount of Bitcoin in this case, that no one is buying here, and so what happens is the price gaps over a specific area. It gaps from like there down to there. There's a gap. Yeah, so there's no orders, there's no buy orders, there's no limit orders, or nothing of substance, and what happens is that the price just jumps. It just skips a whole area, yeah, and it forms a gap. These are called single prints, right? And once the gaps are formed, as the price comes back, they form resistance. You see here, the price came back, it formed resistance, and it continued. Here it tried to get there, it couldn't get there, and here you see that resistance. And so naturally, these gaps are, if they're above us, they're bearish, simply because they're resistance bands. But if the price can get back into them, like I'm suggesting needs to happen for the price to go up, then what happens is that the price will fill that gap very quickly, very quickly. So if and when we get into the single prints and get acceptance, Bitcoin could be going up 2.5% through to 3.7% very quickly. Yeah, you'll get that gap fill. All right. So that's just kind of the idea behind single prints. That's why they're so important, right? But the other thing to contemplate with single prints is that the market doesn't like gaps. So the market will try and fill the gaps. It doesn't have to happen immediately, but the price will always try and find a way to fill the gaps. Yeah. So now that you've seen that there's gaps to the downside, I don't know when it's going to happen. I can't predict that, but I can tell you that it is possible that we're going down just to fill the gaps. It's very possible. Now, what usually happens in circumstances like that is you go, I'm not saying it's going to happen. I'm just kind of contemplating what usually happens when the price does try to fill gaps. You'll go down very fast, and then going down very fast, you'll create more gaps. Yeah. So the market's always the price is always creating gaps because the price suddenly goes fast. And then what happens is, again, the price is trying to fill the gaps and the price goes back up, gets back into the single prints and goes up fast because it fills those gaps really fast. Yeah. And what you've actually achieved, you've cleared the gaps, but in the process you're creating gaps too. That's happen. It's always happening. Okay. It's just continuously happening. Gaps being formed in the market, especially in areas of interest where there's zero volume and in historic price action and gaps are formed. So we're kind of coming into that area now. It's just something to bear in mind. The other thing that I'll do is I'll put my naked points of control. Now I've got some from higher up from historic price action, and so I'm just going to add the ones that I just marked out here. I've got the naked daily point of control somewhere here. Where was it? What was the price? 6,600. It's basically there. 6,5,360. And we have a session point of control at 6,3,680. And that session, I'll just rename it to naked session point of control. It's a bit different color. All right, so let me bring back all my levels now. I've got the single prints. I've got the higher time frame levels. Okay. I've got my volume levels. All right, so this is it. This is the liquidity. Like what I'm showing you now is where the liquidity is. And then the other thing I'm going to do to add to this is I'm going to add my Fibonacci retracement. I'm going to use this pivot here all the way down to this low here. Okay. I'm using the log chart. I do everything from log, even Bitcoin. The only reason I will go back to normal if I want to test out a speed fan. So if I want to use a fib speed resistance fan, that only works on regular. Then I'll flip to regular to try and do that. But you see here, there's no relevance because it's past all of the levels. There's one level up there. Actually, look, the 886. That's interesting. So that actually gives me more. That actually confirms my idea for higher up as a resistance band. Okay, so what I was thinking on Saturday was, firstly, I was contemplating this swing failure which happened and the swing failure here which happened. So both of those things happened. And then now I'm thinking to myself, let's fill the gap. I'm thinking let's go up. Okay, let's go up. Let's fill this gap. Yeah, and let's hit the value area high. And what you can see is we have the single prints that have to be filled. You have a 786 Fibonacci retracement. You have the value area high of the range, and you have this nakedly weekly point of control. So it's a previous weekly point of control that hasn't been traded through. So I do think, and then you also have what I've just drawn now, this 886 on this fib speed resistance fan. You can see clearly that this fan is reacting to the price from this pivot. You can see how the price is reacting in and around this fan. So in my mind, there's no reason why it won't react again when it gets to the 886. So I'm actually thinking there's quite a strong resistance area here. And so that's why on Saturday I've got this idea here, like some kind of hedge or short, doesn't really matter. And what I want to see now is I want to see the gap filled, and let's go up into that area. Yeah, that's kind of where I think the price is going to find resistance. I don't see the price just going through it. So, but it's always good practice to wait for the reaction. Sometimes what you'll see is the price will go through it. There's no reaction, but sometimes that's the entry. If you don't see a reaction, but the price is well on the other side of your area of interest without a reaction, sometimes it's good to just take that entry. But usually if you're going to do that, wait for a candle to close. Don't just jump in midway through a candle. You might, it's possible that you could be tracking it on the 15-minute time frame. You can just wait for the 15-minute or a 5-minute candle to close before you take a position. But if you suddenly see the price go through these areas without any kind of reaction, doesn't mean it's going up. It just means that some people got excited and the candle hasn't closed, and then therefore certain people haven't yet taken their profit. A lot of people just wait for candle closes to decide what they're going to do, whether it's to take profit or to take trades. And so that's kind of a good time. This is the area of interest. This is what I'm thinking. I'm thinking a short here. I don't see any reason why we should go through this level without a reaction. And then I'd like to see us find resistance off this value area high and come right back down. I'd like to see that. I'd like to see that, because what I'd like to see is I'd like to see this point of control flip into support. Yeah. And this whole golden pocket area flip into support. Right now you can see that we're into the golden pocket. We've tried to get through it. We haven't been able to. We've tried to lose it. We haven't been able to. And so what I would like to see is for us to go up, find resistance up here, and then come right back down to find support down here. And maybe let's range here a little bit. Let's put some volume here. There's not much volume in this little area. So maybe we need to put a little bit of volume here. I think that would be quite bullish if that was to happen, because again, it will be consolidation underneath resistance. There's also another line of interest that I have. It's the previous all-time high. You see that? So the previous all-time high is at exactly the same level. This is naked weekly point of control. So it's quite, I think it's quite a strong area of resistance here. All right. So I'm still thinking this. There's no change. I'm in longs. I took a little bit of profit today. I'm waiting the whole weekend. I mean, I didn't take any profit. I thought, okay, let me take a little bit of profit just so, you know, just to feel good about myself. But now I'm still in those longs. I'm still haven't taken most of my profit. Here, I'll be looking to hedge, take profit. It doesn't really matter however you trade, but this is a good place. Okay. Most people will want to wait for the reaction, but if you do suddenly see the price go through without a reaction, it is possible to get a really amazing entry if you just follow the price action at a much lower time frame. Okay, and that's kind of my trading ideas for today or tomorrow, whenever it happens. And then also I'm looking for the price to come right back down here, and I'll be looking to long that. Okay, back into the point of control. Why not? It's kind of what I'm imagining now. Now, weakness in the context of where we are right now, yeah, I think initially weakness would be to lose this daily level. Yeah, do you see this new daily level that we've printed? That's an untapped daily level. And while it might look weak to lose the point of control, and I think the point of control is reacting as support resistance right now. Obviously, like when you're thinking about weakness and you're just honing in on the current price action, the easiest one to see is going to be the VWAP. Yeah, so if you're ever thinking to yourself, am I bullish or bearish today? All you have to do is just turn on the VWAP. If you see the price is trading above the VWAP, then you're bullish. If you see the price is underneath the VWAP, then you can be bearish. So the easiest way to set your bias for the current price action is to see where the price is with respect to the VWAP. The VWAP resets at the server reset every day, every new daily candle. So it only reflects the current day's volume from the beginning of the day candle to the current price action, and it reflects the volume, the average volume weighted by price, weighted average price, volume weighted average price, VWAP. Effectively, what it's telling me that today's current price action, that the volume, the average volume is here. Yeah, that's good because it means that if you're long, you're not feeling the pressure of selling at market, therefore you're not underwater. So if you're long, you generally, you know, the price moves by market orders. And so if the price suddenly comes underneath the VWAP, then all of a sudden everyone from today, and the majority of people for today, are underwater. And so what starts to happen is they start selling at market, which pulls the price down. Yeah. So the first indication to see whether we're bullish or bearish will always be the VWAP. And if you see the price go underneath the VWAP and flip it into resistance, and resistance will be people selling into it. Yeah. That's a change. That's a change. It's the first change of weakness that you'll ever see when the price is about to turn, will be losing the VWAP, because it most of the time it quite closely follows the price. Yeah. And then you'll be looking for a market structure change too. It begins with, in this context, it begins with a lower low. Okay. Now, obviously I'm looking at multiple time frames when I'm looking at market structure. But the first indication of a change is the 5-minute time frame. Just start at the 5-minute time frame. Yeah. The minute you see a change, then that could you could start to think, okay, maybe this is bearish. Okay. Right now, when you're looking at the price action, I'll take you through the market structure since yesterday. Just so you don't need to do it, I can do it for you. It's not a problem. Let's just go through it. Sometimes it's good to go back a little bit back in time just to see. But for all intents and purposes, I can see here that there's a higher high. So let's just go start from the higher high. Higher high. Where was the higher low in the context of here? Well, that was the higher high before this higher high. So that was the higher low. Higher high. Higher low. Higher high. Lower low. Lower high. Lower low. Lower high. Lower low. Lower high. Low low. Lower high. Low low. Higher high. Now this is interesting. Look what happened here. You went from a higher high. This was the confirmation of change. Higher low, higher high. This was the change. Straight into bearish. Not bearish, but the first step, which was a lower low. So you went, this was the confirmation. 2 higher highs and a higher low. Then you put in a lower low here. That's the first thing needed to be bearish. straight into a higher high. Yeah. So this is something to, it doesn't happen often, yeah, where you have suddenly have a change into bullish, then it puts in a lower low straight away to straight away put in a higher high. Yeah. If you see this, this is really bullish. Yeah, it doesn't happen often. And so effectively you put in a, you confirm the change here. This is the confirmation of bullish change. Then you put in a lower low with a high high. This is kind of like a megaphone. It's kind of like a megaphone, right? And so megaphones are really bullish when you see them. Effectively, what was happening was like this. Yeah. So I'm not saying it was going to go to the moon, but you can see as you put in the higher high here, after you put in the higher low, you see how the price action shot up because it was a really bullish price action there in that instance. So this is your higher high. This actually becomes your higher low now. So in effect, you can delete that and that. You go from a lower low here to a higher low, to a higher, sorry, to a higher high, to a higher low, to a higher high. So that's your higher high now. So it is higher low, higher high. Oh, look what happens here. This is your lower low. Okay, lower low. Now, to change this to bearish, you have to put in another lower low. But what happens is it goes all the way up to put in another higher high. Do you see that? So what effectively has happened is this higher low is no longer a higher low. And what you're experiencing here is this. These are your higher lows and these are your higher highs. This is the low to beat. Yeah. So this low is really important. You're basically going from high to low to high. Yeah. Don't worry about the other pivots. We're just focusing on the 5-minute time frame. Right now, we've just put in a higher high. This is the low that the price needs to get down to. So I'm seeing quite bullish buy-ups. You see these buy-ups? They're very bullish. Yeah. These are really bullish buy-ups. To put in a lower low and then to buy it up right up to the high. It's actually really bullish. Yeah. I just want to, I know I'm repeating myself, but I'm also talking to myself. So for all intents and purposes, looking at the current price action, these are the two pivots of interest. If you were looking for a change, because right now I can see that we're putting in lower lows and still going to put in a higher high. For a change, you need confirmation. And so right now, if you're looking at the, you need this to happen for a bearish. I wouldn't, you could always short SFP's swing failures of the highs, always. But I wouldn't, like that's a scalp really. But I wouldn't actually go bearish until we change market structure with a confirmation. Just looking at the price action, you're going to get trapped because we've now put in higher lower lows and gone straight to put in a higher high. Higher low, straight to put in a higher high. So if you just go bearish on the first lower low, you're going to get trapped. That's what I'm seeing right now. So just bear that in mind. If this continues, then it's going to hurt a lot of people. Those are your two key levels now. That's what I want to see for a market structure change. I want to see the price to go down, put in a lower low, come up, put in a lower high, and confirm it with a lower low. That would be a market structure change on the 5-minute time frame. That would need to happen for me to now become bearish, because I'm not bearish at all. I'm extremely bullish. Yeah. What I'm seeing now is the price is being bought up vigorously and we're putting in higher lows. I'm not expecting lower lows. See that? So the next time we go down, I am thinking this is going to be snapped up again. Yeah. I don't know how far it's going to go down, but if it happens, I wouldn't be expecting this pivot to be taken out. All right. So just bear that in mind. If it does, I still won't take the trade because I'll be looking for a change. Yeah. This for me would be really bearish if this happened. Lower low, lower high, and a lower low, lose this daily level. How bearish is that? That's really bearish. Yeah. So if you suddenly start seeing us losing this daily level with a market structure change, that will happen after we lost the VWAP as some kind of support. It can happen. Like look here, we lost the VWAP, but you don't really lose a level until you back test it. So losing it by going through it like that in itself is not necessarily bearish. If you get a back test and a rejection, that becomes bearish. Yeah, so it's not bearish to come underneath some kind of important level if you just go straight back up with it offering no support or resistance. Yeah, so that's really important to bear in mind. But right now what I'm seeing is that we could potentially put in lower lows but still go and put higher highs. That's really bullish. All right, that's kind of the bearishness I'm contemplating right now. I'm not really going to consider more bearishness because this is the first change. If I see that, guess what? I'm bear. I'm back. I'm Cactus. I'm renaming my name to Cactus Amir. Right? Perma bear. But actually, I'm actually expecting. What I'm expecting is that we flip this. Not flip, but we get acceptance. We need to get acceptance because right now we're not getting acceptance. People may ask, what's acceptance? I think acceptance would be time spent above this single print, and I think the minimum time that you're looking for is about 1 hour, like 2 30-minute candles. So if you see 2 30-minute or so candles close up into the single prints, yeah, you may get a situation where you close, still come back down, but actually it's only really just wanting to go up. Then that would be quite a good place to think about longing if you want to long. If you get acceptance in the single prints, it's a really easy trade. You could just long it all the way up to the end, all the way up to filling the single prints, which will actually for me is a big hedge or a big short. Like I'm looking to short that, and I'm looking to bring the price all the way back down to the point of control. It'd be really nice if we have a really sharp move, because you have a sharp move up, a little bit of consolidation here, a little bit of failed auction here, and then right back down. That'll be fun. It'll be fun. It'll be good to make money like that. Okay, that'll be fun. And then if we could just consolidate in this upper range, then maybe the alts can kind of have fun. And that's the other thing I'm thinking about. I'm thinking about the alts. So it'd be nice for the price to come back into the point of control, find support, hold as support. I think if that was to happen, we could potentially see quite a nice alt season then. Yeah, that's kind of what I'm imagining for alt season. All right, so that's my BTC update. I don't really have anything to say about beyond this because this has to happen first. There's no point considering further ahead when I'm expecting the price to reject off this area of interest here. All right. David is saying a bear div on BTC. Is that lack of buyers? Let's have a look. Don't know why, but my my extra charts always breaks. No, there's no bear div here, dear David. It says bullish. Where's the bear div? Can't see it. What are you looking at? Look, lower CVD, higher lows. Lower CVD, higher lows. Where's the bearishness? To see CVD bearishness, you want to see the CVD going up. Yeah, we're not seeing the CVD going up. We're seeing, oh yeah, ignore that. David is saying prices rising. We'll see. That's bullish. Price rising and CVD going down is bullish. Is bullish because the shorts, it's market shorting with the price going up. That's bullish, not bearish. It's the other way around. Right? That's the divergence. The divergence is here. Price going up, CVD going down. That's hidden bullish CVD divergence. This is bullish. This whole price action is bullish right now. Right? David's David is, I'm not bullish until Slurf gets above the VWAP. Let's talk about Slurf. Any questions on Bitcoin? Is everyone appraised of what's like? Is everyone situationally aware of what's happening on Bitcoin now? We could see a nice fast move up here because there's a bit of a gap. There's a nice short to be had, and then let's fill the gap back down to long the point of control. That's kind of where I'm at the moment. And these are all of your kind of liquidity. You see all these horizontal lines. It's like a little bit of a liquidity heat map, yeah. And naturally, you can see that we are currently we're above a lot of support. There's a lot of liquidity underneath us to support the price. If and when we do decide to go down, then obviously I would first want us to see if we lose this daily level. That's really important. Okay, if that was to happen, then I have to kind of analyze to see where I think the price could find support. Potentially the first line of support, potentially. I don't see why we lose that daily level, to be honest with you. I think that would be very unusual, considering that we've had a bullish engulfing weekly candle. Very unusual. But anything can happen in crypto, in Bitcoin. Anything can happen. Maybe if we are going to go down, I don't see it, but maybe either the golden pocket, you know, or down here you've got a naked daily point of control, 786, and a daily level. That's probably, like, if we are going to go bearish now and people are thinking about longing, then really the best long is going to be here right now, probably here. And that's also another back test of that speed fan at 75. It's quite a good area to long, but there's no reason why the price can't just simply, if we are to lose that daily level, and this is the thing you have to remember, like losing that daily level, the price can go down, swing failure the low, and bounce right back up quite easily. Just bounce off that daily level with a swing failure. So I'm not really thinking like that until we have a confirmation of market structure change. So naturally, like when you're looking at longing, yeah, that's going to be your first great long right there. Swing failure of that level into the daily level. Why would you, you'd long that? You wouldn't short that. A swing, if the price gave you a swing failure into a daily level, that's a long. Now, sure, you're going to take profit in the first line of resistance. That's not a problem. You do that, but you still take the long. So, and then you don't go bearish until you see a confirmation of market structure change. Yeah. So that's your first long, potentially, if the price was to go down that far. And then the next long is going to be the next, like literally every swing failure, every single swing failure here, you could potentially long, because every single swing failure also has some kind of confluence attached to it. You see here, you're coming into the golden pocket, the 618. Yeah, there's no reason to imagine that the price can't hit in this circumstance. Just mark it, draw it for you. In this circumstance, do that. That would be a long. That would be a long. Why not? You can long those. Yeah, you just have to execute it on time. You know, you wouldn't preset your orders. You wait for the swing failure. You wait for the reaction, and then the big long would probably be right down here. Again, it's hard for people to long when the price is dropping, but those are the best longs. Those are the best ways to make money by buying the fear into your areas of interest. Yeah. Now, I'm not necessarily thinking the price is going to go to the moon, but that will be a good place for the price to find support. There's no entry here, so here it would just be a reaction, but here it would be kind of more like, like that, because if you are going that far, you're seeing a big sell-off, and so naturally that's the last place where I would potentially expect the price to find great support. 786 daily level, naked daily point of control, and back test is 7.5 speed fan. It depends on when we get there, because here would be Wednesday. Obviously, if it happened tomorrow, that would be the best time. This is all bearish ideas, but I'm still thinking long. I'm not thinking short. I'm thinking long. We had a really bullish weekly candle. I'm thinking to long that. I'm not thinking to short that. If I want to short, I need to short. I need to lose. I need to have some kind of confirmation. And so right now the point of control isn't really, well, I mean, maybe it is. I don't know. It's hard to tell. Maybe you can see some kind of price movement around it. You see, it's hard because it wicks in and out, candle closes in and out. Maybe you could argue that there is some kind of price movement in and around it, but it's not holding. Whatever it's doing, it's not holding. You see right now the price is dropping underneath the point of control. You could argue, okay, that could be bearish. Maybe the price is just kind of just going to range here for a little bit, and maybe it's going to go back up. I don't know. But I mean, maybe it was, you know, that was potentially that was a good short. Oops. Potentially that was a good short earlier with that swing failure. When was that? That was at 11 a.m. That was about 2 hours ago. It's a good short. Swing failures are always good shorts or longs. But right now I'm not thinking short, just simply because we're in bullish market structure. Okay. So right now, when you look at the price, what's it trying to do? It's trying to find support to go back up. Yeah. Eventually what will happen is the people who are short will take profit, and people who are bullish will start longing, and the price is just going to go back up and maybe make another high. And what you're doing is you're making higher lows and higher highs. Yeah. And so when the market structure is bullish, you really want to long as long as it's bullish. And if you're looking to short, then you would short the swing failure, but that would be more of a scalp. That you wouldn't necessarily hold that for a long time. That you would be looking to take your profit quite quickly. All right. So that's kind of where I'm at now. And obviously, if the price goes up and flips that SP into some kind of support with acceptance, you could probably long that too. A little bit of a breakout long. You need an invalidation, but you need acceptance, and then you could probably long that all the way up to fill those single prints too. Of course, the longing down here would be better, but that's perfectly acceptable as long as the price was able to find acceptance into the single prints. Yeah, that's really important. You see, on 2 occasions in the last few days, we've had a rejection and another rejection. Yeah. So eventually, I'm hoping or expecting that we will find acceptance. It might take another 1 or 2 attempts. Eventually, it happens, but just wait for it to happen. You don't have to preempt it. Yeah, you can wait for it to happen, because eventually what will happen is you'll see that you will find acceptance, and then the price will go up really fast. Really fast. It'll be an easy, quick trade to make. You just have to wait for the acceptance. So you see here, there was no acceptance here. The price came in. 15 minutes later, the price was out. Yeah. Here was an instant rejection. It was like a wick, a tiny wick. And so here we're looking for acceptance. That's what we're looking for. I'm not going to short this at all right now. I just want to make you aware of that. I'm not interested in shorting this range. I'm seeing bullish CVD on Bitcoin, and for me, there's no reason to short that. If I was to short now, I know that some fucking big whale is absorbing my shorts. This is where you want to short, up here. Okay, so just mark that off. 6.9, it starts at about 6.9167, and that's through to about, potentially, I mean, you have to see how far it would go. If it was to fill all the single prints and then come back down, potentially all the way to 6.9979. It's quite a large range, so you may want to wait for a reaction first, some kind of reaction. But I think it's very unusual to go above this 786 without a reaction. Therefore, if it goes above this 786, which is at 69352, without a reaction, possibly that will be your best entry. Just wait for a candle to close or some kind of lower time frame reversal pattern to form before you take that short. And it'd be very weird to suddenly for the price to shoot through the value area high You need an invalidation, so just bear that in mind. So whenever you're thinking about taking the trade, you need to know when you're wrong, okay? And so if you don't know where you're wrong, when you're wrong, or where you're wrong, then you shouldn't be taking trades. All right, that's Bitcoin. Any questions on Bitcoin? It's a bit long, but I had to do kind of like a full take because I wasn't streaming yesterday, sorry. And hopefully everyone is kind of a little bit more prepared for what's about to come. I'm bullish. I'm expecting to get to there at the very least, and then let's see what happens, right? If we do go down, I'll be looking to long. I'm not looking to sell. And then if we do find some kind of bearish market structure change, you know, that'll be the only time. But again, I'm still thinking long. I'm not thinking short at the moment. I'm not thinking short at all. I'm looking to long to go up. All right. The other thing I wanted to look at on Bitcoin, so all of this I'm just gonna put into one folder, and I'll just create a group of drawings, rename them to Monday Trade, but it's all messy. Hide it. I can now hide all my other stuff. So this is the other thing I wanted to talk about Bitcoin. And so everyone who's been following me, which is all of you, I guess, I've been looking at this corrective Elliott wave. So let me just pull that back up. Where's my Elliott waves? There they are. Let me go to the slightly higher time frame. So we've been tracking this together, ABC, 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 right? That completed our WXY on time here. And we've obviously had this little kind of slightly impulsive move to the upside. Now, does the correction continue, or are we now in a bullish impulsive move to the upside? Honestly, it's hard to tell. I can't tell. Yeah. It's very hard to tell. But right now it looks like we're still correcting. Yeah. I just want to make you aware of that. Right now it doesn't look like we're in some kind of crazy impulsive move to continue this move to higher prices. I can't see that just yet. The price action now is slightly different to our previous impulses. Yeah. And so I don't know. And this is what I don't know. And this is what I was telling you before. I don't know if we have a weak wave, 5 waves here to complete our wave. I've got it up there, but I don't know if we just complete our wave 5 like this, like a wave 5. Yeah. And fall into a much higher time frame correction, or whether that correction continues. I don't know how that's playing out. Yeah, I'm not seeing the impulsiveness yet that I think we need to take us to higher prices. Okay, so I just want to make you aware of that. While I'm bullish, it doesn't mean that I'm expecting the moon right now. I'm not seeing that yet in the way the price is moving, and I'm not seeing the way the shorts aren't being squeezed the way I need them to be squeezed to see that kind of impulsive move to the upside. Yeah. And so when I'm contemplating short fast price increases to the upside, I'm considering a short squeeze. So you've got a lot of shorts built up in this range, and unless they're squeezed, unless they close at market because they feel under pressure, because they think now the price is going to higher prices, the price won't go higher. Yeah. And so for me, a big factor that plays in my kind of idea of what's happening now is this move. Was it on Friday or Sunday? No. When was it? Friday. This first move. You see this first move here? It went up to 63449 thereabouts. Yeah. And that triggered about $2 billion worth of liquidations, I believe. Yeah. And so this is BTC liquidation heat map. Let's have a look at it together. This is Binance BTC USDT perpetuals, right? So they have the most volume. So obviously it's a good one to look at when it loads. If it loads. It's not loading. Bastards. That doesn't help. Let's have a look at 3 day. Maybe that will fix it. There you go. So this is the heat map. And basically, when was it? It was on the 17th of May, wasn't it? No, this is it here. 19th of May. No, that wasn't it. Right, let me just change this to 1 week. That'll be better. When was that? 19th? 17th. It must have been that one, yeah. See that liquidation zone there? This is 66978. Here it says only 714 million, but I'm sure it was higher. Like when I was looking at the time, I'm sure it was above $2 billion all the way up. This push up. I think there was quite a lot of liquidations here. And if you look at this yesterday, again, look at these liquidations, yeah? When you get liquidations, you're talking about good morning, Jorge Campos. Thank you. When you're looking at liquidations, you're talking about market selling at unreasonably high prices. Yeah, because that's when you get liquidated. Even I don't know if you realize this, but if you get liquidated, you don't actually get liquidated at your liquidation level. You'll get unreasonably bad prices. It usually liquidates you earlier, and then it sells much lower or higher. Yeah, it's like really bad to be liquidated because you'll always get filled badly. You always get filled badly, and you'll always get filled a little bit more prematurely as well. Okay, and here we're seeing big liquidation events, and the price hasn't gone up. Yeah, do you see? That's a signal. That's a sign. That's telling you something. It's telling me that there's no short squeeze. Yeah, that's what's going to take the price up. People don't necessarily understand how the price moves, and therefore they don't really understand why we probably may not see higher prices, the higher prices that we all want to see just yet. Because in order to get to higher prices, you just need big liquidations. You need a big liquidation event. Yeah, and it mustn't be sold into either. So in these kind of two situations that I was looking at, Friday and yesterday, you see both on both occasions they were sold into. So either longs took profit or new shorts were opened, and there just wasn't enough market buying to take the price up really quickly. And that's how the impulsive that's how the impulse begins, with a big liquidation event. So when you're thinking about the moon, yeah, it's always about the moon. So let's think about the moon. How do we get to higher price? We need a big liquidation event. We need $2 billion worth of liquidations, and we need no one to sell into that. We need it to be 2 billion, 3 billion, maybe more. A liquidation event with no one selling into that. And then what you need is you need a whole market to actually start longing that, not selling, but longing, buying into that. Yeah. So it starts off with this, and then you start getting people buy that. Yeah, that's how you're going to get to higher prices. Until we see that, there's no reason to think that we're going up to higher prices. I'm not seeing that yet. Yeah, and that's kind of what makes me hesitate about imagining that we're in some kind of crazy bullish 5-wave impulse to the upside. And while I'm counting, I'm also considering that we may still be correcting. Yeah, so the only way that I'm going to know if we're still correcting is to see if the firstly to see if this Elliott wave timings and pattern continues. That's my first thing that I'm looking for, to see if this pattern continues, yeah, based on time. If it doesn't continue based on time, then I'll be looking to see whether we are in a weak five wave completion here. If this was the end, then could this be the first impulse? This could be the ABC. We'd see another impulse. That would be your wave 3, and then you'd have a met wave 5, and that's it. This is basically this is your wave. How far did I have that short go? Not even that far. Oh my god! Like, I'm actually contemplating a really wave 5. This is a wave 5 right there. Yeah. So ignore the ABC idea that I have here. I'm actually really thinking to myself, if we don't get that impulsive behavior that I'm looking for to take us to higher prices, could this be the wave 1 of our final wave? And now we're seeing some kind of correction. Wave 1. This is your correction, some kind of ABC, I don't know. And then we see a wave 3 to take us to there, to my area of shorting, for another correction, ABC down to here, to my area of longing for a wave 5. That's it. That's literally the end of this final wave 3. You have a very average, boring, mediocre, nothing 5 wave move to finish the wave 3 of Bitcoin. And then we move into a macro ABC correction, which I expect will be a zigzag, and it will look really bearish. Okay, it will look really bearish because it's a zigzag. Zigzags are generally downwards, yeah. And so this is what I'm contemplating. So I just want you to be aware of that. If we get a mediocre wave 5 wave here, we can't see higher prices. I'm not seeing that yet. And if we suddenly see all-time high impulse, look, of course, I'm going to be like, no, actually, it is quite impulsive, and this is our impulsive. We won't know until it happens. And then I'll be thinking to myself, well, does this, otherwise, these timings are correct, and we continue this initial correction, this wave 4 correction continues. So there's a lot of things happening, and there's a lot of things to keep an eye on, right? So I'm just keeping an eye on those things. At the moment, the best way to contemplate the price is just level to level. And right now, I just want the price to go up here so I can short. Right? I'm not really thinking up there or up there or up there. I don't really care about up there right now, because in my mind, the price has to first get past this area. So that's kind of Bitcoin. And we're just going to have to monitor this to see what happens. I mean, could this be, look, that was quite impulsive. That's like a wave 1 up to there. This whole thing is looking quite corrective, isn't it? And so that's why I'm thinking like that. This looks quite impulsive. Where does it start? Does it actually start here? Probably not. Probably here. That's quite impulsive too. Potentially you could have started there slightly earlier. So potentially you could have had your wave 1 there for an ABC all the way down to here somewhere. Potentially that could have been your 3. But you need to count 5 waves. 1, 2, 3, I don't know. Can't really tell. This could be corrective. I mean, you see, that's the thing. This could be like a flat, and we could still be, this could be it. This could be our final 5 wave, a really poor, mediocre, weak 5 wave. Well, if we do see a weak 5 wave here, which I'm actually considering, because it would work. There's no reason to think that we're going higher, because that was our wave 3. Why does the wave 5 have to be crazy? We've had, honestly, when I'm looking at these waves, we've had a pretty impressive wave 1 and a really crazy wave 3 already. This whole thing is a wave 3, yeah? So when I'm looking at these charts, yeah, our wave 1 was here, okay? I've deleted it since then, so I don't know why I've done that. Let me just put it back in, because it'll make life a lot easier for people to see what I'm talking about. This is our wave 1 here, all the way up to here, all there. So we're in a 3 now, and we haven't done the 4 and a 5. So I think wave 1 was probably up to there. Wave 2 is to there. This was like an extended flat. Let me just change the color here. Purple, whatever, pink, similar. So this is our kind of higher time frame. Yeah. So that was our wave 1. This is like an ABC flat, extended flat correction. Okay. Then we've had our too many lines. Let's get rid of that one. Let me get rid of the trend based fibs. Oh god. Get rid of those trend based retracements. Right. Right. So you have your wave 1. You have a ABC extended flat here. That's your wave 2. Now in this wave 3, I've only counted 1, 2, 3 waves, and we're either in our 4th wave now. Yeah. And so if people aren't familiar with Elliott waves, the impulsive waves have 5 waves. The corrective waves, generally speaking, have 3 waves, ABC. Yeah. So the impulsive ones, the 1, the 3, and the 5 have 5 waves. That's how you know. Okay. And the corrective ones, the 2 and the 4, have 3 waves, generally speaking, ABC. And then you can break down those waves into their subsections. So if you have a corrective wave, which is an ABC, the corrective part, the A, can also be an ABC. And then the A can also be an ABC. And then the B can be an ABC. And then the C can be an ABC. Okay. And then when it comes to the impulsive waves, the 1, the 3, and the 5, the 1 can also be 5 waves. It should be 5 waves. So the 1 is also 1, 2, 3, 4, 5, and then the 1 of that is also, you just break it down to create this idea. And so when I'm looking at this is the purple is the higher time frame, the macro. And when I'm looking at this, we've done our wave 1, we've done our wave 2 here. This is again another flat correction. This was actually really impulsive, this wave 3, and this wave 3 is all within the context of the higher time frame wave 3. So effectively that was the 3 of 3, right? And when I'm looking at the expansion from the bottom of the 2 to the top of the 3, it's like a 90% expansion of Bitcoin. That's quite a lot, it's not a small amount. And so therefore I've counted this correction. The correction at the moment, it was a WXY, which is a combination of ABC, ABC, ABCs, all the way down to our level here. Now, if correction is over, we should either be in our wave 5 now. That'll be 5 of 3. That's this green thing here. And that means that this 3, which is the macro fee, wherever this 5 ends, will end. Yeah? Wherever this 5 ends. Now, even though people are bullish, the 5 doesn't have to be big. Yeah, the 5 doesn't have to be to the moon, because the 5 can be anything. The 5 can be whatever. You just have to count 5 waves. That's all. That's all you have to do. So I'm counting. I'm trying to count to see if I see 5 waves. And I'm not expecting it to be strong. I'm expecting it to be whatever. And I would expect then that would be the end of wave 3. So if that happens, then this correction, this WXY, was complete. If we get 5 waves now, and that completes the wave 3, and that doesn't have to take out the all-time high. Yeah, it doesn't have to. It can be lower. It could actually just take out these 2 pivots without taking out the all-time. No one really knows how that's going to play out. We have to see. So I am contemplating a weak wave 5. Yeah, that would change a lot of things. Okay, so initially I was contemplating the WXY correction to continue, and so that's also possible. I have to see how that plays out. Okay, I'm not sure I'm seeing that just yet, and the way we'll know are with the timings, because if this WXY continues, then the fib time will be in sync. Okay, so if we suddenly see the price action go out of sync of the original fib time that I have marked, this one, then we'll know that we're no longer in that correction, we're in something else. And so I just want to see if that plays out. We won't know, unfortunately, until we reach this pivot sometime in June, 4th of June. That's like the next big pivot, but in between then I'll be expecting an ABC. Yeah, that'll be an ABC, right? And so even though now I'm contemplating, this is why it's so hard, because I am contemplating a week 5, but that could also just be the finish of the A. Do you see what I'm saying? And so that's why you have to count the waves to see if you're going to see the impulsive waves. Okay, it's not as straightforward as people might imagine. If the 5 completes here, then this extended WXY is invalidated. It doesn't exist anymore. So just hide it with this fib time. Okay, that would be, and this would, you'd hide that as well. If that is your 5, that would complete your 3, right? And guess what we're into next? A deep correction. Yeah, and potentially that deep correction, this would confirm Cactus Cake's imagination. Potentially that could go all the way down to, guess what? It could go all the way down to 31,000. Right, now I'm not saying it's going to do that. I'm just saying, as far as Elliott Waves, if we do complete our 5 now, and it's a week 5, and that completes the 3, then in terms of the rules that Elliott created when he made his Elliott Wave theory, the only thing that can't happen is that the 4 can't come underneath the top of the 1. So effectively, that gives the bears a target of about 33,000. That's what happens. So the bears now have a target. Okay, if we suddenly see the 3 correct here, the bears have a target. Now, how would you know that we're in that kind of move, this kind of correction? How would you know? So it's a good question, and I think that's an easy answer to that question. There's a bull market trend line here on these last waves. Yeah, so you have the 0 to the 2 to the potentially to the 4, and so let me just hide my Elliott Waves now. Let me put that in there. Just hide that. And what you can do is you can just draw a trend line. Yeah, so so this wave 1, there was a trend line from the 0. Oh, what is that? Like that? Stupid. Right, that's better. Let me see where it is. Let me just put that Elliott wave back in so I can see where my waves are. Sorry, should have done that before. There. Is that it? What did I do this? I can't remember. All right, let me just do it from this one. So from where this begins to there. Where is it? No, this is rubbish. I've forgotten how to do it. I must have got it here. Trend lines. Sorry about this. I'm just trying to remember what I was doing. What was that? Nope. Volume, channels. There you go. There you go. Yeah. So we haven't actually come to, and this is why it's possible that our correction isn't over yet, because this is the trend line for this wave, this free wave. Yeah. And so this is why the correction, we may be continuing this. And so I don't want to alarm people. I'm just saying there's lots of things that could happen. We don't know yet. And so we're just trying to keep a track of it to see. But if this WXY continues, but again, it'll be out, you'd lose that trend line. I don't really think I'd want to lose that trend line. So as far as I'm concerned, for this wave 3, as soon as we break this trend line, this wave 3 is definitely over. Yeah. The reason why is because it starts at the 0 here, and then this was the correction. This is the 1. This is the correction, ABC. That was where the 3 began. So this is your kind of wave 3 trend line now. Yeah. And we haven't actually come back to it. Like people were thinking it was possible that we could maybe, when we were dropping, we could come down here. That would be a perfect test. But I don't think the minute you lose that trend line, that's it. Your wave 3 is definitely over. That would be, for me, that would be a confirmation of wave 3 being over. I wouldn't think that we'd be in a bullish impulsive wave the minute you lose that trend line. You see that? And so that's what I'm looking for. The problem with that trend line is it's quite you'd have the price be have to quite low to lose it right now. Like to lose it right now, you'd have to go all the way down to 53,000. So it's hard to know without lower prices. And so it's not a really early warning system. It's kind of a lagging system. The same thing happened here. When you look at this, it's not easy to see, but in this kind of bullish move, we had a kind of steep trend line, and we lost it. You know, when you lose it, you know, but it's already too late. That's the problem. So when you have this kind of idea, you know, you have this trend line, but actually the wave, there's a wave 1, wave 2, wave 3, you know, wave 4, wave 5. Actually, the wave 5 completed. Losing the trend line didn't really help. Because by the time you lost it, you were ready to complete the corrective wave to go up. Yeah, that's the problem with that trend line. But effectively, that would be the final confirmation that we actually are in that corrective wave. So if we now suddenly lose, oh, actually, wait, am I doing this wrong? Okay, that's why I'm doing this wrong. I'm looking at regular. That's why this is looking all wrong for me. Okay, so actually, no. So this makes more sense. See that? I was looking at the regular chart and my trend lines were all wrong because my trend lines are always based on log. So actually this makes a lot more sense now. I was struggling for a little bit, as you guys noticed. Okay, so you see here, this is correct. So you see, this is your bull market. This is your, so let me put the Elliott Waves right back on. So apologies for that. So you see, look, 1, 2, 3, 4. You see this 4 here? So let me just, you see this? So it's basically a touch. This is your wave 3 trend line. This is the 0. This is the 3. So potentially that's the 5. Potentially. Now, does that mean the wave 5 started then? Not necessarily. Just because it touched, it doesn't mean it started there. You still have to count waves. And what I'm suggesting is that the minute you lose this trend, actually this trend line is going to be easy to see. If we lose this trend line now, then I think our wave 3 is over. That's how I'm going to know, right? So I'm keeping quite a close eye on this trend line. You see right now, actually, it's not too far away. If we were to lose this trend line in the current price action, it would be about $59,000, right? I think once you lose that trend line, you know that this wave 3 is over. That would be that would help us. And we had the same idea here. Again, sorry about that. I was using regular, but you should be using log. It helps. So from here to here, look. See that? So the minute you lost it, see that? So anyway, that's kind of what I'm keeping an eye on. So I'm not sure right now. I kind of think we might be in a really mediocre 5 while everyone is expecting higher prices and explosion to the upside. We just have to see how the price behaves. Unless we see a massive short squeeze, I don't think we're going to be experiencing what everyone wants us to experience right now. And that's going to be a question for me and for everyone else. Could we just be forming lower highs here? Yeah. Could the price now just kind of go up maximum to there? And that's it. And that's the wave 3 finished. That's actually what I'm thinking. Yeah. And then this would potentially, I don't know how this would be. We'd have to kind of mark this out. Maybe this is going to be something like this. I don't know. We kind of, maybe that was, I don't know. In terms of timing, that wasn't correct. So I am thinking here. Impulse down. Impulse, flat correction. So that would work. Impulse, deep correction, impulse, flat correction. And actually that's it. That's actually your wave 5. Really, that's what I'm thinking. I don't want to alarm people, but that's really what I'm thinking. Now my short is lower down. So while you have that highest trend line, which will take us all the way up to the 886, probably that would be the limit as far as I don't necessarily think it has to go up there. Maybe that's it. Maybe this is it. Maybe this is it. You know, this is what I'm thinking. I'm thinking maybe this is your last wave. It's a very mediocre, rubbish wave, and we end it here. Okay, if that was to happen, then what I would be expecting is a macro zigzag. Okay, the reason why I'm expecting a macro zigzag is simply because we had a macro flat. Yeah. And while a lot of people are thinking higher numbers, yeah, when I look at this, it would start by us losing this trend line. Yeah. Then things will start to get really bearish. Okay. And then the price will be trying to get down to 33,000. Don't necessarily think the price will get to 33,000. That will be the target, but we may end up with some kind of, if that's it, you know, zigzag. It would be like a big A, big C, big B, big C, and that's when you finally get your big impulse, your massive impulse. I think for us to get a big 5 impulse, that will be the last wave of the Bitcoin bull market. The last wave. If we're about to finish this wave 3 and head into some kind of corrective 4, macro 4, I think if we want an impulsive move, we really need to have a much, like a sharp, something like that. Like a really fast and sharp ABC like that. Yeah, not necessarily so prolonged like this. Yeah, even though this is a zigzag, it's quite a prolonged zigzag. I'm not in favor of this idea, to be honest with you, just because I'd like to see Bitcoin going up to stupid numbers, but maybe this is what we're going to experience. Like, no one can really predict the future, and maybe if that was to happen and we have something like that, then we're only really going to go up to 120k, you know, like, because then you have your last 5 wave impulse, 1, 2, 3, 4, maybe that would be it. Okay, that's kind of where I'm at right now when it comes to the price action. That would complete the 5 waves. Then you'd start some kind of higher time frame macro correction. Okay, and there's no reason to think that that would be deep then. And this is what I think, this is what people need to understand. Yeah, everyone, now if we suddenly go to 120k, does that mean we're now going to get this? Maybe not. Maybe we've had that kind of deep corrective idea in the last bear market, maybe the next bear market that we experience, the next macro bear market that we expect, the highest time frame bear market, is just going to be a flat correction above the all-time high wherever we get to. Maybe that's all we see then. Yeah, so we get to our highest number wherever it is, and then maybe we start seeing a macro sideways correction ping-ponging from the previous all-time high and the all-time high that's put in, and that's all we see. We just see a really nice flat correction for whatever happens next. Anyway, these are ideas. I have no idea. I have no idea what's going on. I'm just kind of keeping a track of this and just reporting to you what I'm seeing, right? That's basically Bitcoin. It's quite a long Bitcoin analysis. So any questions on that?